Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equity markets brace for a shaky start coming in the holiday shortened week this time around. Gift Nifty at this point of time suggests a 75 points dip at the open. Talk about Asian shares that struggle to shake off the China blues, geopolitical concerns after an added worry after Russian warship on Sunday. Talk about FII, the sold shares to an extent of around 3,000 odd crore. No support being lent in from FIIs. And if you talk about DIIs, they've purchased shares to an extent of around 500 crore on August 11th. Let's talk about stock with highest delivery out there. Britannia Industry, Gujarat Gas, Marico and HUL are some amongst them. And also in terms of earnings that we like to watch out for, ITC, DV's Lab, Vodafone Idea, along with AstraZeneca and Bajaj Healthcare will be some of the companies which will be reporting in their numbers along with Hindustan Copper, Senco Gold and Wockhardt for that matter. Also, let's talk about the FNOQs and FII's trend, particularly when it comes to FNOQs. They've been sellers to an extent of less than 100 crore in index futures. They've been buyers to an extent of 6,800 crore in the index options, and they've sold shares to an extent of 1,500 crore in stock futures. Also have been sellers in Bank Nifty futures to an extent of less than 500 crore. They have bought in options worth around in Bank Nifty to an extent of less than 1,000 odd crore. But let's talk about stocks that are currently in ban. That includes the like of Chambal Fertilizer, Delta Corp, Balrampur Chini, Hindustan Copper, India Bull Housing Finance, Z Limited, Granules, Manappuram, amongst others. And new in the ban is India Cements out there. What comes out of the ban is Canfin Homes. So bunch of names typically which have made it to the list. But let's discuss some stocks and strategies with Prashant Sawant, founder, Catalyst Wealth out there. Prashant, good morning. How is the trend shaping up? A holiday truncated week. Any ideas that you have in terms of the strategies that you think would be a good positional trade coming in for the viewers out there, both on Nifty as well as Bank Nifty Index?
Very good morning, Nickey, and good morning to all the viewers. So I think after a one-sided rally, which we witnessed from the month of April, right from the first day to about mid of July, end of July, I think what we are seeing is a very well expected and a healthy kind of a correction, where what I am expecting is, if you look at the Nifty futures closing for the last week, that is Friday, we closed almost near 19,500, which happened to be a major support, and we see a clear around 40-50 points gap down. Now, what happens to be the next major support is 19,400 when it comes to the August futures. So I think for the next couple of days, considering a holiday tomorrow, so today and Wednesday, I think 19,400, if it does not hold, we may nosedive another 100, 150 points, and we may see levels around 19,200, 250. So my suggestion on the index would be to stay light and at the same time wait for 2 days, where I think the low for the August may be formed and the rally may sustain very soon if we bounce from levels between 19,200 to 250. So for today and Wednesday, my strategy on the index, especially on Nifty, would be to watch it and look out for levels around 19,200, 250 in futures. If we bounce from there, definitely we can initiate longs. But today, and especially today afternoon, I see a kind of a sell-off coming in both the indices. So I'll be very cautious and not keep any longs on the indices. When I compare Bank Nifty with Nifty, I see more weakness in Bank Nifty, because what you see in Nifty is kind of longs unwinding. What you see in Bank Nifty is strong shorts building up. So, and the major factor here is in the last week, Reliance, which is the main contributor to Nifty, at least showed some strength. Whereas if you compare Bank Nifty, HDFC Bank has been a complete laggard and not shown any strength. So from that perspective, I would be a little more cautious on Bank Nifty. And where we close somewhere around, if you look at a future, somewhere approximately 44,500 on Friday. So the downside level, 44,200, just about a percent down, happens to be a make or break level from a short-term trading basis. But those who are positionally looking at Bank Nifty, 43,600 on the futures is a make or break level. If that level breaks and we close below, then I think Bank Nifty may show more weakness. So for me, as I said, for Nifty for the next 2 days, 19,200, 250. Similarly for Bank Nifty on the futures, 43,600 to 700 would be the levels I would watch for. And as I said on both the indices today afternoon, I'm looking at a strong sell-off coming in.
All right, that's the word coming in. Not a good news technically ahead of the holiday truncated week, but Kotak Mahindra Bank and Adani Group of companies, right before I address the stocks and news, some amount of sell-off clearly building in for Adani Group of companies. What's going to be a strategy there? And also Kotak Mahindra Bank 1 month target there around. That's what the viewer typically want to know.
So if you look at Kotak Bank, I think most of the banks, IndusInd banks had shown some strength, but that also fizzled out. But Kotak Bank has built a decent base. We are currently around 1790, and the major support for this happens to be 1770, 1770. So as long as that holds, you can continue to hold a position. But if 1770 breaks, which is 1.5% from Friday's closing, then I think you'll have to exit the longs and wait for the next opportunity. As far as the entire Adani group is concerned, I have been extremely cautious on this because every rally you see news coming in and the rally is fizzling out. The same thing you see at Adani Ports. We are closed above 800. Now you see a pre-open 780 and somewhere below that. If I were to talk specific about Adani Ports, I think a major support here is 765 in spot. So those who are holding any longs or overnight positions, you need to follow that level 765. As long as we don't close below it, you can continue to hold. Only if we close below it, you can exit for some time and wait for the next opportunity.
All right, that's the word coming in. A conscious call also there. But let's address the market open and then we'll address the stocks and news along with the lineup that we have for the show. But Nifty 50 right now, as we were anticipating a bit of shaky start coming in, and that is we are looking at losses to an extent of 0.4% out there. Slew of factors, right? Weakness in global cues. You have number of developments which have happened over the weekend which kind of have turned the sentiment a bit bearish for now. 19,400, that mark has also been taken off the charts right now. Nifty currently trading at 19,340 levels, thereabouts. Let's talk about Bank Nifty Index just to see whether the momentum remains, there are more losses coming in for Bank Nifty. 0.5% gone on that index. So clearly weakness has crept in, not in the second half, but right at the word go. Remains to be seen how does the second half shape up. Mid-cap index, losses are deeper. 0.75% of losses coming in for the mid-cap index. And small-cap index out there, well, a bit of underperformance, which was seen from the larger counterparts. Small-cap is also participating into the weakness. Losses to an extent of 0.3% thereon. Talk about the IT index. It's witnessed some amount of selling pressure for IT index as well, and talk about the other sectoral indices that we have on the chart. Metal index is not holding up too well. Losses, profit booking in early deals. Consumption, the story remains the same. Banking index is already bleeding out there. Talk about pharma index, a bit of selling pressure also coming in for that one. 0.75% of losses coming in for that one. FMCG, well, witnessing some amount of selling pressure there too. And talk about the realty index for that matter, along with auto. Well, the losses are just sharper for auto index. Realty index is acting no different at this point of time. Losses are perhaps more pronounced for the rate sensitive as compared to that of defensives. Clearly the trend that is playing out. But let's look at the top gainers and the top losers that we have on the screen. Advances 6, declines 42. Market breadth clearly in the favor of declines. ONGC, which is reported in numbers, is the top gainer out there, along with Coal India, NTPC. These are clearly state-run companies which are doing well in trade today. Talk about Kotak Mahindra Bank, some amount of loss out there. Clearly, like we suggested, the market breadth is in the favor of advances. Barely 6 stocks which are advancing, so no surprise out there. Let's talk about the losers. Adani Enterprises, Adani Ports, Hindalco, metal stocks along with Adani Group of companies are basically beaten down in blue. Tata Motors and Eicher Motors too are some of the other losers that we have on the screen right now. Prashant, intense sell-off in the early deals. You are anticipating perhaps the pressure to accelerate in the second half. Do you see that as a buying opportunity? If yes, what's the stock recommendation looking like?
So, Nickey, definitely not on the frontliners, but yes, there are some opportunities in the small and mid-cap space. So the two stocks which are on my radar for the week and maybe for the next few weeks, 3 to 4 weeks. First would be Hoodco. I had seen a good breakout here, backed by volume. So my stop loss here would be 62 on closing basis spot. I'm looking at a slow move to targets around 75. And the next one is one of my favorites private banks, which is IDFC First Bank. I would like to add every dip here, and as long as it doesn't close below 84, which is my positional stop loss, I can definitely see it moving slowly to target levels around 98 to 100. So those are the two stocks that I'm definitely looking at buying in the weakness that the market is currently showing.
All right, let's address stocks and news at this point of time. ONGC has reported better than estimates number. Net profitability has come in at higher than what the street was estimating as compared to the loss figures that were reported. Top line down by 6.8%. EBITDA is up by 49%. And talk about the margins at this point of time, 57% compares to that of 45%. Patanjali Foods out there, well, sharp margin correction that we have witnessed. Net profitability down by 63%. Revenue is up by 7.5%. And EBITDA is down by 57% for this one. Margin at 2% as compared to that of 5.4%. Essentially, we're seeing a sharp contraction in margins, correction in edible oil prices, and the EBITDA of the edible oil business, which has reported in EBIT losses. So that's a bit of negative coming in for this one. And Adani Group of companies, well, that's the one that needs to perhaps be in a little focus today. The news development started with Adani Ports auditor Deloitte resigning in after qualified opinion. Deloitte has communicated to Adani Ports its resignation plans, and the exchange announcement suggested that Deloitte resignation is expected in few days. That's exactly what the wires were carrying on Friday. Of course, there was a bit of clarification which came in from the company, where Adani Ports issued a statement saying that the board has accepted the resignation of the auditor, and in fact, it has approved MSKA and Associates as the new auditor, which is one of the top 6 companies, perhaps the audit firms that Adani's could have. And it said Deloitte, on the other hand, also issued in a clarification and said that they've decided to resign as the auditors. They have concerns related around the company's wish not to independently look into separate group of companies which are not listed separately. Today in the morning, there were few reports from ET Now, actually the one that we've picked up, where it suggested that SEBI is set to hand in the final Adani report on Hindenburg allegation to Supreme Court this week. So that's the one where you can see perhaps a lot of developments, negative developments flowing in for this counter. But what is positive at this point of time for this particular company or group of companies instead is the fact that a few brokerages like that of CLSA and Jefferies for that matter, they've given a positive rating on this one. CLSA suggested a buy call and the target price is to an extent of 878. Sees the resignation of the auditor as one of the events which typically has taken place on account of expiry of terms. This is something that has already played in the past, and goes on to say that Adani Group has had many auditor changes recently. It also says that Adani Group has removed the auditor from its audit role at Adani Transmission on expiry of its term also. That was one which took place for Adani Transmission. So that's a bit of a discounted factor there, and it expects overall it continues to see Adani Ports and Sports as a buying opportunity. Also, what we have is Jefferies on Adani Ports. They've also suggested a buy rating and a target price of around 890 per share. And Seas views the auditor resignation as a negative replacement. However, a reputed auditor has come in, which essentially is a bit of solace coming in for the company. Prashant, quickly on this one, between Adani Ports and other group of companies that you have in the Adani Group, what do you like, and what would you suggest a buy opportunity for any of them at this point of time?
So I think if you look at the price action which has happened on Adani Ports, there was a gap down. It has been bought, and just as I said, 760 on Adani Ports happens to be a major support. So the low made is somewhere around 770. That's why those who are holding the longs can continue to hold. But in between this turbulent environment and the news-driven one, I would not recommend any fresh longs at this level. Only those who are holding the position can continue to hold as long as 760 is intact on a closing basis.
All right, Prashant, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us this morning.
Thanks a lot.
All right, let's navigate our discussion more towards the fundamental side of the story with the given pressure that we're witnessing in today's session, how the global setup is essentially shaped up, how FII trend is adding up to the pressure. Let's bring in our guest, Jigar Mistry, co-founder, Buoyant Capital out there. Good morning, Jigar. How are you doing? And what
Very,
sense? Go ahead.
sorry, very well, Nickey. Thank you for inviting me to your show as always.
All right, pleasure is all mine. Jigar, I just wanted to ask, what are you making? What sense are you picking up from the markets right now? Given the kind of correction that we are witnessing, there was a week of consolidation which took place for the markets. FII trend has not been that bullish thus far. We've seen some amount of sell-off coming in from FII's trend. Do you think it's a reversal of sorts for Indian equity markets, or you think it's just a breather after the sharp up move that we've seen for the indices? Sense that you can give us some perspective on that count.
Right, Nicky. So see, what's really happening is that there are two very broad school of thoughts which are operating alternatively. The one school of thought suggests that central bankers have learned so much from 2008-9 global financial crises that they have been adept at increasing the rates only so much that your economies don't go into a recession but only slow down. Secondly, your inflation eventually is a funny concept, right? Because say a 100 rupee item goes to 120 in 1 year, that's a 20% inflation. Once 20 stays 120 the next year, it's a 0% inflation. So with the passage of time, your inflation comes down, economies will not go into a recession, and effectively, you will be able to ride out the whole storm in the next few months, and the interest rates will start getting cut down. And that is, I think, the view that a lot of people have bought into. If you look at it from March, of the 1,280 companies with more than 500 crore in market cap, some 25% companies are up over 50%, and 60 companies have doubled in value. If you look at the market, over a 1 month basis, the large caps are down. So we are almost at a 700-point correction on the Nifty. But if you look at the BSE small cap index, that's up, if I was not mistaken, about 4.5% as of this morning. So effectively, a lot of people have gotten into this belief that economics is an exact science and a break has eventually been found out. The other school of thought is, slightly where we are also tilting to, is that nobody beyond the point knows these things. If you have taken the interest rate hike from almost 0% to 5.5% on the Fed fund target rate upper bound, your $86 billion of QT is continuing. In fact, as a matter of fact, the Fed's balance sheet for the first time is down almost $1 trillion, 0.98 to be precise. They're down $1 trillion from its peak. And so far, the liquidity has been provided by Treasury, which eventually needs to wind down. So the exuberance that has taken the pendulum to the other extreme needs to unwind a little bit. There's just too much happening very, very fast. And yes, over a 10-year, India is a great story. But we don't need to price all of it today itself, right? There needs to be a breather room, also with one eye on the fact that the difference between the policy rates between India, so repo, and the FFTR upper bound is only 100 basis points. And that's the lowest we have ever seen on this trajectory. So I have a data for 23 years. It's the lowest in 23 years. Maybe it's the lowest ever. And you have a $280 billion short-term maturity, which needs to be refinanced. Now, will companies actually refinance this with just a 100 basis point differential? That needs to be asked. And if not, then I think rupee becomes a very large talking point as when the RBI meets again. So all said and done, we are positive on India over 5, 7, 10 years. But in between, I think there will be a time later in the year where you can get to dial the risk up, and one needs to take a breather as we go ahead.
All right, within the market, which are the opportunities that you think can be alpha generators at this point of time, given I think if for a long term, you're looking from a long term perspective, like you said, that probably this could act as an entry point, and if yes, which are the sectors that you think have more essentially value picking which could take place within the space?
Right. So financials, including NBFCs, are in their healthiest that I remember. Clearly, your loan growth has been decent. Your NIM contractions has happened in some cases higher than what most expected, in some other cases. But NIM cycle is on the downturn. Credit cost continues to be benign. So all these three factors suggest that eventually, this could be a very interesting play. Clearly, but if FIIs, will be sellers, in the very short term, you would see these stocks being sold because they can only sell what they own. And in that scenario, you will have the opportunity over the course of next 2-3 months to get positioned here. Pharma, US generics especially, are around at the turning point. So in fact, I wrote for Moneycontrol earlier in the month or end of last month that, you see a scenario where the generic prices may have formed a bottom and stocks have rallied very hard since March. But if there was a cool down, that's another place which is getting very interesting. The EMS space is places where we are, as a fund, have some exposure, and most of those companies have reported a reasonably decent number. We are still waiting for the turnaround on the staples and the IT pack. Both of them have not done reasonably well over the course of past 1 year or so. But I think incrementally, if the markets were to correct, then those can provide an opportunity. And clearly, there are a lot of these, bottom-up businesses which can make a lot of sense. So, yeah, it's broadly looking at a zone where we would want things to level off a little bit before you start building things in cement. Sorry, I should have mentioned cement. Given sort of the slowdown due to monsoons, but still North is reporting very strong and stable pricing. So that's another place which we are interested in.
All right, Jigar, we're just going to leave it at that. Thank you so much for taking out the time and speaking to us.
Thank you, Nickey, as always.
Right, today's opening bell pays homage to the life and the achievements of Rakesh Jhunjhunwala. Rakesh Jhunjhunwala, the outspoken billionaire investor, trader, entrepreneur and philanthropist, is being remembered on the occasion of his first death anniversary. Jhunjhunwala was known for his remarkable contribution to the world of stock markets and was often referred to as India's own Warren Buffett. According to Forbes list, Jhunjhunwala was the 40th richest man in the country with a net worth of around $2.3 billion. A risk taker at heart is how the late Rakesh Jhunjhunwala used to describe himself. At the same time, Jhunjhunwala mentioned that he would risk only what he could afford to lose. His philosophy in life was to dream with his head held high, but the feet on the ground. N. Mahalakshmi caught up with Madhu Kela to speak about late Jhunjhunwala. Tune in at 11 a.m. to watch the full interview. Listen in to the conversation.
How would he navigate that kind of temperament while keeping relationships so strong?
So Mahalakshmi, people like us who are very close to him now, we would never mind his anger. It's not that he would have got so many times angry at me,
Right.
really blown. If I'm late 15 minutes, he will get really angry and say, "Tu bahut bada aadmi ban gaye."
Right.
But I knew that after I will go home, he will call me and say, "Madhu, sorry yaar,
Right.
कि आज तेरे पर ज़्यादा गुस्सा कर दिया."
Right.
So I knew that he would not mean, and I think people who knew him well, they knew that he doesn't mean. It's just a temper that he has. He will blow off, and he doesn't mean to harm you. He doesn't mean to speak ill about you. He doesn't mean to think bad about you. It's just that a temporary thing. And because he is so opinionated, he is so expressive, it comes. It comes across like that. So our relationship was fabulous. I never ever, even when he scolded at me in my early years and even later years, right, I only felt it like a younger brother,
Right.
if my elder brother is trying to actually teach me something.
Right. So coming back to markets, one of the ironies of...
Let me just say, what I learned from him.
Yeah.
Without that, this section is not complete.
Right.
So there are few things, Mahalakshmi, that over the last 20 years which I picked up from Rakesh Bhaiya. One thing is that you need a broad judgment. When you are really wanted to make big money in life, you don't make big money in life by being an analyst. unless and until you have a broad judgment of things, and unless and until you have perspective and opinion of things, you can't make big calls. And that is the real difference between someone who calls himself an analyst and someone who really calls himself as an investor.
Right.
That a real good investor will have a broad judgment, right? So let me give you one instance. It was COVID time. I called him that I like BHEL. And the price was some 22, 23 rupees. And my opening statement was that भैया भेल से भी भेल सस्ता मिल रहा है. मतलब भेल पूरी से भी भेल सस्ता मिल रहा है.
Right.
And I just did some number with him. I told him that this is 22, 23 rupees. This is the market cap. But the only big thing is that there are a lot of receivable from the government, and the bail has not ever been. And this is this thing. Before I could keep the phone down, he confirmed to me I bought 2.5 crore shares. And then later on, I offered him that why don't we do a call with the CMD?
Right.
I'll get a top class analyst, etc. He said, "Kuch zarurat nahi hai."
Right.
We have to take a broad judgment of how things. So that broad judgment.
All right, that was the interesting conversation that Mahalakshmi had with Madhu Kela. But tune in at 11 a.m. to watch the full interview. A blog is active on the Moneycontrol website, so do catch it too. But with this, it's a wrap and goodbye from the entire team. Puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below.